Hi, I'll be explaining one of the setups that I've done last week on pound yen and how it got to play out. Uh, to tell you briefly, most of my setups are based on patterns where I look at support and resistance, but mainly in limelight of it been coming down into a pattern, and that's how I go about picking a trade call based on setups. Of course there will be resistance, there will be support, but in relevance to it being within a pattern. So here's the call that was made on little fish FX on the pound yen, and it's been done on 21st of July, so it's still out there. The whole concept was that we are considering a pattern in play on the pair where we are ideally looking for a test of 192.20.30 and a halt to consider going long for a possible move heading right into the 196 handle. So the overall call, or the bigger picture, I was looking for the move to go into 196, and why I was thinking on those lines and why I was interested in these number 192.20.30. Let's have a look on the chart that was done up. This was a chart, and what I posted and what I described, if you read more on the website, is that I was taking it down as a head out here, possible left shoulder on around to this base, and I was thinking in terms of that this was a right shoulder and we already have a breakout. So what happens is that I had a target trend line that was coming down roughly about 194, 40, 45, give or take a few pips, and eventually the main target coming down towards 196. This is actually 196.10, 196.20, right around to this area. And the whole pattern, if you consider again, ignoring these trend lines, this becomes your head, this becomes your left shoulder, this becomes your right shoulder, and this becomes your ultimate neckline. So basically the true neckline comes to about 196.10.20, slightly increasing. So coming down into this week, I would assume another 20-30 pips on the higher side. Well, right now let's concern I mean excuse me, right now let's get back to the point of the call. This is where we close on the 21st, and I was looking for a decline down to this trend line and see if it starts holding here to initiate buy and try to get a touch of 194, 40, 50 again, then wait for a swing and then look for a breakout for it to continue to 196. This whole setup is based on a pattern that we have already broken a trend line, neckline. So this is where my rectangle, I put a rectangle out here just to demonstrate that this is a neckline, and if it holds, it will just 45 my view that this indeed ends up being a neck break here, and we need to go on the higher side. And I'm going to come back on the chart and show you exactly what happened. So this is where we ended, right around towards we had a big blue spike candle, and then of course did not take out the high, so the price was rejecting, and I was looking that it needs to come down. So uh, this is the same chart, same layout. So this is where we at when I posted it. It's a 4 hours time frame, and then eventually again there was an attempt again, and we did not take out this high, and eventually zigzag consolidated and it dropped down and hit down on the same trend line. So if I do a cross section on it like this, it's a T4, and T4, if you can see on the information bar, was coming down to 192.26. My listed interest zone was 192.20, 192.30. In terms of, you always give around 5-10 pips, plus minus. And the low that came, as you can see on the information bar, was 192.30.23. So the test of 192, or the trend line, was done, and it started bouncing back up. So basically, this was a holding pattern. And if I can probably do on a 15 minutes chart, go back onto the same time, I think right around here. So you got a small doji close also out here, which gives you the impression that, this is where you can indicate your buys. And the buys, it did head down 192.66, dropped down a bit, and then, it continued high almost towards around 193.98. Let's say 190. So let's say even 194. So this setup was plain simple, was listed down. This trend line was listed down as a breakout, and as for any breakout, once it does, it posts uh, a high print. Let's say here in this case, we're talking about resistance, and there was a retest done. So a good retest means you're gonna get a new high, which means it's a continuation pattern. But we did not go above the high print of, as we can see on the information bar, the high was actually 194.37. We came back as high as almost 194, and then dropped and started getting close under. So this has not changed my point of view that this indeed is not a inverse head and shoulder. But how I'm looking at it, I'll show you. It's easier for me to do it this way. Uh, this still, sorry. This still to me is the head. This zone still has the left shoulder. That's mean if I look at this zone from here to here, this was a consolidated point till it dropped. This was, of course, one of the gaps over the weekend, got closed in, and then, swift drop and swift pullback. Another characteristic of, head and shoulder, inverse head and shoulder, is by the time you put in a head, there's always a, swift move back in, one way to spot them. And again, this consolidation almost matches this consolidation. So that means we can expect something like this. That's mean this zone still is what you call a right shoulder zone. So basically, this was just a breakout. This was not the neckline break. This again, minor neckline, but this still is a true neckline out here. So that's mean eventually it needs to head back to 196, whatever the numbers are, probably about 196.30, 196.40 in the coming week. So what I'll try to do is, unless I see a reason enough or basically strength enough to, start shorting out here. Otherwise, my preference is to look for 190, let's say plus minus 10, 15 pips, and see a reaction. I would actually prefer right now the price to come down and head around those areas. And if I start getting a bounce, that means I need to go in for a buy. To me, the pattern is still inverse head and shoulder, and that would imply that from here we go hit here, we retrace some, and then we break again, retrace some, and then carry on here again, retrace, and again go back. So what I'm expecting is that, if you get a bounce or if you get a drop till around here, which will be ideal right now, and start getting bounces, then we got a lot of swing moves that's coming in anticipation. And how we can do is that, as we progress There will be more trend lines coming in, and hold on. There will be more trend lines coming in, and we can start playing some swings to those region as we progress. So the concept of trend line analysis based on pattern, it gives you a higher probability. So given the flow, breakdown under here, it's conceptual wise right now the pair is more likely to get short and drop down towards 190. But what I do is that I'll see, I have this based in has a breakout point now, but I think if I do something like that, I would be, okay, we can use that. That's mean it can still probably, coming week, since right close to it, if we don't get any gaps, then I can use this and try to hide my stuff somewhere above that. But then the difference is coming in quite substantially high, not to my liking. But what I can do is see another test here and break out these lows to start consider going short for a decent target towards 190 and start preempting buys from here. Of course, as we progress for the week to come, based on any fundamentals or any stronger move in between, I'll reserve my option to change it or to carry forward with it. As of right now, more than shorting from here, I would prefer to buy. If I start shorting, if I start shorting from here, definitely I would need it to go and break those lows, 191.60 lows, and I'll be quick to suggest that there will be a swing. So it will be more like hit here, cash, wait for some bounce, sell, come down here, cash, get some bounce, sell, till we hit here and here. That's where I need to go and start looking for buys. So if I succeed buys here, and it prevails, but prevail I mean at least gets a close back above here, then I know I'm more likely to be good getting a test here and most likely breaking on a reattempt and heading down to 196.30, 196.40, and there I can try another decent sell, at least back for about 200, 250 pips before it goes back and breaks again. So this is a small setup based on trendline analysis. The whole concept of trendline analysis comes down, what it boils down to the point that you end up picking trades from probably the most optimum point of, sorry, most optimum zones, and all you need to do is when the trade comes or kicks in and starts heading in your direction, show patience and 60, 70 or whatever to your liking. When it starts moving in your favor, do some banks as in cash in proportion, a portion of your trade, amends your stop, and see if it can goes and hit the uh, prime target. And or what you can do is start amending your stops. The candle like these are good. You can amend your stuff from here back to here, and then if you get stop out, then you look back for a swing down here. If it starts holding, then you are buying again. If it breaks, then either you're selling it or whatever you've been planning on your trade, you can do accordingly. To me, the safer is buy from here. Uh, Let it drop down here, test it, starts holding it, go for a buy and hope for it close above T4 again. That's mean now you're good to go for here, swing back and likely break and hitting down 196. So it's a small trade setup based on patterns, based on, well, main thing is basing it on pattern, but making use of some support and resistance. Whatever happened in between that, I'm not interested because it can consolidate, it can swing, it can go for a zigzag pattern. I'm not interested with that. I'm more interested in prime levels. So from prime levels, all I get is that my drawdowns are less. If I'm successful on my pattern, on my pick of a direction, then I know there's a lot of decent pips coming my way, and I can cash in some, lock my profits, and I can go and look for my other setups to come in, and go about doing the business. Thank you very much.